Now we need to proceed to our, with our uh, lecture. Okay, let us just proceed. There's been some disturbance in the few minutes ago. Okay, as I was intended to answer a call. Anyway, I'm sorry for that. Now, we can safely proceed. Okay, just a minute. Now, like I've said, that the boundary is very important because it separates these organizations from one another. All right, and by the boundary, we are just saying that their area or their jurisdiction or the main um, activities which they do, which separate them from the rest of other organizations. They might be doing the same thing, like for example, competitors in an industry, but they would be having some form of identity, some name, some brand uh, perspective, or some brand offerings and so forth, which actually demarcate them from one another. All right, even if not strictly businesses, all organizations will have business transactions. By the end of the day, these organizations will be there, the army, the police, and so forth. They need to pay their wages, they need to pay salaries, they need to comply with certain rules and regulations. So by the end of the day, they will be engaging in what are called business transactions. And some of these would be financial, some of them would be non-financial. Okay, and the financial ones would be based on cash or credit. Now, types of business transactions. Okay, all the above transactions, all the above transactions are summarized at the end of accounting periods in two statements. So those business transactions, which are usually financial, by the end of the day or by the end of the month or week, they are summarized into two main financial statements. We have the statement of financial position, which shows assets, that is, amounts owned by the business. Okay, they are possessions of the business, and liabilities, which are amounts owed or obligations which have to be settled. Then we have got an income statement which shows the income, such as sales, less expenses such as rent, wages, electricity, raw materials, which have been incurred. If income is greater than expenses, then we call this one a profit. But if income is less than expenses, we call that one a loss. In the statement of financial position, assets are divided into non-current assets such as equipment, premises, motor vehicles, and these are kept long term in the business. Then current assets such as stock, um, inventory or stock, then receivables or debtors, and then cash. These are all current assets. These either are cash or will become cash within 12 months. The reason why we call them current assets is it's because they might be cash or they will be cash within 12 months to come. Then liabilities are divided into current liabilities such as amounts that have to be paid to suppliers within 12 months, or long-term liabilities which have to be settled after 12 months. Now, types of business documentation. Each type of business transaction has its own set of documentation. The documentation is needed to control the progress of the transaction. Okay, we need to know where we are in terms of a transaction. We also need to know or to record the transaction itself and provide a history of how the transaction proceeded. This is sometimes known as an audit trail. Okay, we need to know how the transaction was executed, was initiated, etc. So we need some form of history. Then sometimes the documentation is purely internal, sometimes it arises externally or is sent outside the business. Nowadays, the term documentation is not confined to paper documents, as many business transactions are mostly handled using computerized records. So it might be a document, though it came through an email, but the word document still exists. Typical documentation is as follows. We've got purchase of goods and materials. This will usually be initiated by someone in the warehouse or factory who can see that more materials will soon be needed. Often this person raises a purchase requisition which goes to the buyer's department. So somebody in the warehouse completes a purchase requisition, okay, which then goes to the buyer. We need something. So may you please procure us 3,000 bags of cement because our warehouse is running out of cement. Okay. Buyers will then raise a purchase order to order goods from the most suitable supplier. Goods accompanied by the supplier's delivery note will be received in the warehouse. Okay, where a goods received note will be raised. This must be checked back to the order to ensure that the correct goods are being received. Invoices. Invoices from suppliers will be received and recorded by the accounting department first in a purchases daybook, just a list of invoices received, and then in the payables ledger. A payables ledger is like a record, okay, for all our payables or our creditors. And creditors, these are people we have given us goods on credit, okay. They might be wholesalers, etc. We have given us goods on credit. Usually suppliers will send statements of account setting out the amounts still owed. Statements act as reminders, and also they can be used to check that buyers agree with suppliers' versions of events. Later, the invoices will be paid and a remittance advice sent by the customer to indicate which invoices have been settled. If goods are returned to suppliers, for example, their quality was poor, then buyers will ask for a credit note. This acts like a negative invoice, which will be reducing the amount that has been invoiced before. Alright, we are done there. So make sure that you understand these business documents because they always come in the exam. Alright, you also need to read there. I'm sure you need to read that part again. Okay, this is why we gave you the notes. Alright, and this part I just want to go to where I feel there might be some need of further explanation. Yeah, the coding system. Alright, businesses use codes or coding systems to code their products or their certain expenses and so forth. Everything is found in a computer with a code. Okay. Universally, it is a practice for accounting systems to use coding systems to refer to customers, suppliers, accounts, and employees. Codes are used because they are concise and precise and can be subject to computer checking. So that's the reason why we would have codes. Because an employee, you discover that an employee has got an employee number, okay? A product has got a particular code, etc. So we are saying that these codes are needed because they are concise, they are precise, they enhance automatic processing, they enhance checking as well. So what is to be concise? Okay, instead of referring to a product as a 50 centimeter high resolution LED monitor, the product is given a code such as a 50 HRL, which stands for the 50 centimeter high resolution LED monitor. Okay, this is much more quicker to write or type. Even for the two operators, it's very easy for them to just enter the code. Then precise. There might be several makes of 50 centimeter high resolution LED monitors, and information might be confusing and ambiguous if the manufacturer, let's say Sony, Panasonic, Samsung, etc., wasn't specified. A code number can therefore be used to illustrate that products and people are referred to uniquely. For example, 50 HRL LG. for a 50 centimeter high resolution LED monitor of the LG brand. Okay, so that's the essence of coding. And then automatic processing. Codes can also help in processing transactions. For example, if all income related accounts have the structure 1XXX, all expense related accounts have a structure 2XXX, that is, for all expenses we start with a 2. For all assets we start with, or for all income we start with a 1. Then it's very simple. When you see a code, okay, when you see a code in a system like that starts with a 1, then you can easily say that, oh, this one refers to some income transaction. But when you see a code that starts with a 2, then you can easily see that this one refers to an expense. So that enables automatic checking or automatic processing of information. If a code has been entered in the system as a 2, then automatically the system will realize that this one is an expense, and then it deducts it from revenue and so forth. Then checking. If all inventory codes are 7 digits long, then forms and input screens can be designed for this. Computers can check that all 7 digits are present, and sometimes more sophisticated checks can be carried out on the structure of the code. This reduces the chances of error. So if you input any code that is less than 7 digits, then the computer is going to decline that. Okay, if you input a code that is more than 7 digits, then it will also decline. So there could be some self-checking system or mechanism if we are using codes. All right. Right. So there we spent a lot of time. Then we've got different methods of coding. We've got the simple to use coding, the understand. Codes should be. These are the attributes of the codes. Okay, where the several methods of coding. We have got the simple, the sequential codes or simple codes. All right, and then hierarchical codes or hierarchical or significant digit codes, and then block codes and faceted codes. All right. Why do we use codes? Because codes are simple to use, understandable, concise, precise, expandable. By expandable, we are saying that they enable you to expand if there are more customers or more suppliers that need to be coded. Code enables you to do that. Now there are types of codes. We have got sequential codes. In this method of coding products or customers, we simply allocate numbers in sequence. For example, number 1 is Abraham, number 2 Adkins, number 3 Ahmad. Okay, this is simple and concise, but as constructed, it might have some faults. Okay, there is no relationship at all between the code and the item, because we are simply saying that customer number 1 is Mr. This, and customer number 2 is this, but we can't actually relate why Mr. B was given number 1 and why Mr. Alex was given number 2. Okay, there's no relationship actually. That's the problem with the sequential code. And sometimes when we reach a certain figure, let's say the portion where we are putting codes is just a 4-digit portion. When we reach, let's say, code number 9,999, there is a problem when you want to add another customer. So businesses have tried to limit that problem by actually leaving gaps when they allocate code and increasing the zero portion or the portion for inputting these codes. But the problem is when you want to locate somebody, if you have forgotten his code, if you want to locate them using the code, there is a problem because there's no relationship actually between the numbering. All right, then we have got hierarchical or significant digit codes. In a business, hierarchical codes could be used to code the accounts in the general ledger. For example, a code such as 3112 could be interpreted as machinery cost account using the following system. Okay, where we are saying that we need to know what 3 is. We know that 3 is for assets. Okay, a code that starts with a 3, it means that is for assets. So assets is 3, and then 1, a number that follows immediately gives us the class of the asset. Is it a non-current asset or a current asset? So if we are talking of machinery cost account, machinery is a non-current asset, so there is a 1 there for non-current asset. And then cost and accumulated depreciation, those have got their own code. Cost is 1, accumulated depreciation is 2. So material cost, machinery cost account, we go to a cost, so we go to 1 again. So this is why you are seeing that there is 3, 1, 1, and then 2, because it tells us the specification of this asset. This is machinery. So machinery, on the list of codes there, you can see that machinery is a 2. So our ultimate code becomes 3112. So in a significant digit or hierarchical code, every digit matters. Every digit in that code matters. Then we've got block codes. Block codes, these lie between sequence code and the full detailed hierarchical code. Okay, they start off giving some information but then lose enthusiasm. Alright, so what it means is block codes are just, they are of interest initially. The first number, the first digit is of interest, okay, but it loses interest as it expands. Alright, so it just gives a general assumption. Okay, so if you for generate the code, you might find 1 XX. XX are those are numbers that are given to other to a series of expenses, but we only know that the first digit 1 stands for expenses. All right, but the other numbers now, they just confuse one another. They don't show us anything. They don't tell us anything, like in the case of hierarchical code. So block codes only give one number of interest, and then they lose interest as they go. Then we've got faceted codes. Faceted codes are made up of a number of sections, each section of the code representing a different feature of them. For example, in a clothing store, there might be a code based on the following facets: garment type, customer type, color, size, style. If SU stood for suit, M for men, B for blue, a garment could be given the name or the code SUMB 4017. Similarly, NDFW 1423 could stand for women's white night dress, size 14, style 23. So on the great advantages of this is that the type of item can be recognized from the code. So the faceted code has got some digits or letters that actually give you a hint of what we are talking about. Okay, the faceted code. So there's some exercise there, but you need not to do these exercises because we have given you the exercise to do. So you just have to do the exercise. Then in the business, you may also be worried of discounts. Discounts might come as an advantage. If you go to a supplier and get and they are given a discount, we call that one a discount received. And then when a customer comes to you and you offer them a discount, we call that one a discount allowed, because you have allowed the customer to go away with your goods at a reduced price. Now there is what is called a trade discount, also known as a quantity or bulk discount. This is a simple reduction in the price of the goods. For example, 10% might be offered if at least 10 units are ordered, and 20% if at least 100 units are ordered. So in the bulk discount, we are simply saying we are encouraging customers to buy more from us, okay? Because you know that to keep inventory in stock is actually a cost. There's need for storage costs, for security guards to look after those inventories. So if customers buy them quickly, we can actually reduce the storage cost as well as make profit quickly. Then a cash discount or settlement discount. Here we are encouraging our customers to pay us early. Okay, to pay us early. This is offered on the condition that payment is received quickly enough. For example, items might state that 5% discount is given provided payment received in less than 30 days. So you may see that if after you consider the trade discount, a customer then also is given some further discount in the form of a cash discount for prompt payment. Okay. Then we've got to worry about sales tax. Okay, sales tax. Sales tax is also an issue of concern to accountants, because by the end of the day, we need to worry to remit some tax to Zimra or to receive some form of tax on the purchases which we have bought. Okay, so it is also called VAT, value added tax, that's sales tax. Okay, now there are two forms of sales tax. We have got input tax and output tax. Okay, input tax is tax that is paid on purchases. When we go into a wholesaler and order goods, then we pay what is called input tax. But when we sell those goods, we collect from customers what is called output tax. Okay, so output tax, we collect it on behalf of Zimra, on behalf of government. Okay, on behalf of the government, so that we have to remit it to the taxman or to Zimra or whichever country, I mean the agents, the revenue agents in whatever country you will be staying in. All right. So what happens in most jurisdictions is that you need to do a set of the output tax. If it is larger than input tax, you remit the difference. If the input tax is larger than the output tax, you then have to get a refund. But in most jurisdictions, they do not give refunds. What happens is that you have to deduct on your future output tax. Okay. The amount of the sales before the tax is added is called the net amount. Okay, and after tax is added is called the gross amount. Similarly, most purchases will include an amount of sales tax that is charged by the supplier. It is important to be able to work out gross and net amounts and the amount of tax, and this can be done by a cost structure. Okay, so we are having that cost structure there, where you need to actually play around with the figure. If there are bulk or quantity discounts, the VAT is calculated on the amount after the discount. After the bulk discount, then you have to consider the VAT issues. The amount of sales tax charged on sales is known as output tax. We discussed about that. And business suffer sales tax on their purchases, that's input tax. Okay, we talked about that. Then let us discuss about this illustration, and we call it a day. Okay, if sales tax is at 20%, then the cost structure would be the net amount is 100, and then plus sales tax of 20, so the gross amount would be 120. Okay, because the net amount without tax is, you consider it as 100%. Then when we put sales tax on top, the ultimate value should be 120%. Once that is established, then you can easily move between any of the sales figures using proportions. Net amount, let's say the net amount is equal to 280. Therefore, the net amount, that's 280, plus 20%, okay, plus 20%, which is equal to gross amount of 120. So what happens is that the sales tax is equal to 280 multiplied by 20 over 100, which is equal to 56. So the gross amount is equal to 280 multiplied by 120 over 100, which is equal to 336. You could have even determined this value by simply saying 280 plus 56, and you would come to 336. This is why they say that the 280 is the 100% figure. Add the 20% on top of 280. 20% of 280, that's 56, and you get your 336 as the gross amount. Okay. Now, you're given a scenario where the tax rate is 40%. I mean, the tax figure is 40. Okay, and you have to determine the 100% amount as well as the 120% amount. So the net amount is equal to 40 multiply by 100 over 20, and you get your 200 as the data amount. All right, and the gross amount becomes 40 multiplied by 120 over 20, and you get your 240. So this is the mathematics you just have to play around with, and I want you to just devote a little of time on this one so that you understand them better. All right, what are the benefits of using computers in accounting? Most accounting systems are now computerized, and these systems should offer the following advantages over manual systems: faster provision of information, that would not be easily available without a computerized accounting system. For example, a customer might just come and say, "What is my balance? What is my account balance?" and this and that. You need, with a computerized system, that's very fast to obtain, and you give them their statement. Once the system is set up, we get what is called cheaper information, more accurate information, because arithmetic and certain other errors will be eliminated. Of course, sometimes things go wrong. If you input bad information in the computer system, don't expect it to come clean or come right or come good, because garbage in is garbage out. The GIGO. Don't forget the GIGO acronym. Now, information processing. All right, we have got two forms of processing. We've got batch processing, where information is entered into the computer and accumulated, and then batch processed at once after you accumulate everything. For example, the issue of collecting salaries for employees. You don't just process one salary, and then you go to the next, because it may cause problems with workers. They need to be paid at once. They don't want to hear that somebody has already been paid before them. They want to receive their monies usually at once. So that's where it becomes good to have batch processing. Also, batch processing enables your work to be checked by your supervisor before you process anything. However, we have got a real-time processing or online processing, where information or transactions are processed live or at once. As you input the information, the transaction is then processed. That's real-time or online processing. That one is good in businesses where such transactions are required. For example, in online in air travel businesses, okay, the system should be so synchronized and integrated such that when a customer purchases a seat, there should be the system should also report when they buy an air ticket. The system should actually process all the information required, and the route where that person is going to travel should also be updated, so that there won't be any problems. Okay, that's where real time is actually important, where the real time information is actually required by the nature of the transaction. All right, I think we've done everything there. Other things there, they're just for your reading, and I hope you have enjoyed this short presentation. And if you still have got any questions, please don't hesitate to contact me. I'm always be there. I'm always there for you. This is why you hired me, and this is why you need to relax in your house whilst you get the coaching, the best top of the range coaching for you to pass the ACCA exams. I hope you enjoyed this week's lecture, and please don't forget to do the assignments. Do the assignments by due date, and I'm giving you the due date on the Google Classroom. Just follow the due date. If the due date has been surpassed, please liaise with the tutor, liaise with me, so that we can arrange for an extension of the due date. I hope you have been satisfied with this presentation. May the good Lord bless you forever and ever. Amen.